5. This is a meeting of the TAPERS committee. I'm going to begin with calling roll. Committee member Jay Ellington.
Here.
Mayor Alan Brown.
Here.
Director Laney Harris. Committee member Debbie Nolte.
Here.
And Derek Cornett.
Here.
The second item on the agenda is to the approval of the 10/14/2021 minutes. That was our last meeting.
I'll make a motion we approve.
Okay.
Second.
All in favor?
Aye.
All opposed? Okay. The third item on the agenda is review proposals for the new asset management services. And those were Bank of OZK, Regions Bank, and Stephens Bank.
Has everyone had the opportunity to review the proposals?
Yeah, I have.
And are there any recommendations from the committee or further discussion?
So what I gather from this is that in our current portfolio right now, that's with Bank of the Ozarks and Stephens.
Correct.
And it comes through Stephens' package.
Yes.
And that's 59 basis points. It's 15 basis points to be the custodian of the money, and it's 44 basis points for them to invest it.
Correct.
So that's what we're paying right now, is 59 basis points.
Right.
And so if you go with just Bank of the Ozarks, from what I'm understanding on this, isn't it 85 basis points? Because we have over 2 million, so it would be 85 basis points for them to manage the fund.
Correct.
And Regions is at 75. So the first question would be is, are we satisfied with the rate of return that we're getting from our current provider? And if we're not, we need to look at these other two, and we would have to look at the offset between what the increase in the fee would be, what the offset of their average increase of their portfolio would be. That's the way I would look at it.
Right.
That's just me. In other words, if you can pay a little more and get more, it's probably worth it. Other than that, I wouldn't change if we're happy with the rate of return that we're getting, because that is the cheapest way, and they're very reputable. I mean, I've looked through both of these. I'm very familiar with all three of these companies, and they're, I mean, probably the best, most reputable is certainly Stephens. And Stephens usually will outpace, I know they would outpace these other two entities as far as the investments they have, their investment portfolio they have. But, I mean, it's just kind of one thing or the other. But didn't y'all do some breakdown on the fee structure and what it would actually cost? Did you do any fee structures on the other two?
Yes. Rachel has that information.
Is that in this stuff that you gave us, or you just did it?
Okay. She's got to go grab her information. She did
Okay.
that breakdown. She sent it in the email.
I mean, am I looking at that right? Is that the way?
No, that is correct. We looked at it on several different ways. I know in our previous meeting, we brought up going out for RFPs several years back. The old police pension fund actually went out for RFP on their fund. Their fund was handled the same way that TAPERS fund is, where Stephens is the one that does all the investments, and Bank OZK handles all of the fiduciary part of it, making all the payments to everyone. They noticed that when they made the transfer from Stephens to Bank OZK, they actually received a better rate of return on all of their investments, and their portfolio actually increased tremendously by making that switch. Their primary issue for the old police pension fund was they felt like enough attention wasn't being paid to their particular pension because it's smaller.
Small.
Stevens is in a position where they basically, when you have smaller funds, they group them with other funds and do an investment that way. While Bank OZK allows you a little bit more flexibility on how your funds are being invested.
Okay, I have that breakdown of fees. So for Bank OZK, our fees would be about $26,500 annually. That'll be about $2,200 per month. Stevens quoted about $10,000 is what we're currently paying. For Regions, it would be about $18,278 per year.
What would, that's all right. We just got started. We waited extra 5 minutes. They said they thought.
I had car trouble, so.
We're just looking right now on the first item, we're just approved the minutes, but we're looking at a breakdown of the three funds. So we have the current investment fund now that's handled by the Bank of the Ozarks. The retirement fund is handled by Bank of the Ozarks on the fiduciary side, and Stevens on the investment side. We have a proposal to look at just Bank of the Ozarks by itself, and we have a proposal to look at Regions. And they're just giving us the breakdown of what the fee structure is with these three entities. So what would Rachel, what would the fee structure be for just Bank of the Ozarks to do all of it? Do we
That
have-
is the 26.5. That's including the entire management and custodial.
So it's 36.5. I guess I'm confused because I took this as Bank of the Ozarks doing custodial and investment.
Yes, that's the
And then
85.
this is what we're currently doing, which is Bank of the Ozark and Stevens.
Correct,
And then this is Regions.
correct.
So what is the Bank of the Ozarks just by themselves?
Is the 8.85. That's including custodial and management.
Yes. So are you asking what is the fee for Stevens?
What are we currently paying?
Oh, what are we
What are we
currently
currently
paying them?
So the 36.5, I'm still confused.
We will be paying them for the custodial portion only. So their custodial portion, if just Bank of the Ozarks is handling, is 0.4.
So the 26.5, that's what we're currently paying Stevens?
No,
And then-
currently we're paying approximately 10,000 to Stevens. Is what,
We're paying 26.5 to Bank of the Ozarks.
No, the 26.5 would be if we went
if we
What-
went to
all
them,
the way Bank of the Ozarks.
if we switched over.
Okay. I don't remember right off the bat on the region side what their average rate of return was. Do y'all remember? I don't even know if they said.
I don't
I don't
think
think
they-
so.
They didn't send.
All they really talked about was basically how much they're managing.
Yeah,
They never really told us what their average rate of return was.
And I think this is up for negotiation.
Yeah, they went ahead and supplied us with the fee structure.
Yeah.
So it would be 75, where was it at? Yeah, it would be 75 basis points, and that'd be $18,000 for Regions. But we don't know what their average rate of their portfolio is, right?
Correct.
And Stevens' portfolio averaged 8.34% in 2021. And Bank of the Ozarks wasn't that high. They do call it S&P. if I'm reading this right, Bank of the Ozarks' average rate of return on just doing both of it was 11%.
Let's see. What page are you looking at, Mayor?
That would be it's kind of all the way through the back there, where you look at their portfolio performance. So when you look at their last year-to-date, this is just on their, this is on their fixed income. So they'll break the way that I'm assuming they do this is they break your investment down to some of it in safe investments and some of it in risky investments. And so they're on their safe investment side, they've had a 4.20 average rate of return since they've started that.
Right.
And so in the last 12 months, as you can see, it's only 20 basis point. But when you flip to the high side, which is where the majority of your investments are going to be in the high side on their, this is their model performance for their entire portfolio. It was 11.10% since inception.
Right.
The difference is you have to take your fee out of that.
Right.
That's what they're earning, but they're not returning all that money to you. So, and I think it's, when you read down there, I think it's, it would be the 85 basis points, I guess, wouldn't it?
For Bank OZK, yes.
Yes.
So you're down to 10 something. So I guess in reality, what they're saying is that apples to apples, they're earning a little bit more money by themselves than what Stevens is earning with them. And would you save any money?
The fee structure basically would be very similar, because Bank OZK for fully managed, it is the 85 basis points. But for Stevens, they're going to charge 44 basis points for the plan assets, and then Bank OZK would charge another 40 basis points for the custodial portion of it. So their total is 0.84 for Stevens and Bank OZK combined, and Bank OZK alone is 0.85.
And they're getting a little bit higher rate. Their performance is a little bit higher rate.
Right, with Bank OZK.
And TAPERS needs all the money it can get.
That is correct.
But what I was looking at is how they compare it with the S&P 500, and that's basically is one of your benchmark. And I'm quite sure they're not gonna do no NASDAQ because that's most technology. But my only question, I had another question too, is how much income, what income fund they invested in as to what type of dividend they getting in the fund, or is this just growth stocks?
I would assume that we're not receiving dividends.
Okay.
You wouldn't receive dividends. You're only earning the interest on the entire portfolio that's managed by them, on how we basically have zero input on how that money's invested.
Yeah.
From the standpoint of, I'm assuming on the front end, we tell them what percentage we want in the safe side of it and what percentage of it that we're willing to risk. And right now, we're probably risking a bunch of it, because if you weren't, you wouldn't be making any money. You'd be making less than 20 basis points, which wouldn't even be worth having it.
Right, and that's based on what the,
But you're not, when you do, that's basically what we refer to as mutual fund investing.
Right.
You're grouping, and they're grouping our investments with other companies, and we're investing in these stocks and bonds and all that kind of stuff. And so you don't earn dividends as an individual customer, so to speak.
And what you can do is develop an because state statute governs how the funds are invested, we can develop an investment plan with the company to basically say, this is how we feel at this rate. And then once investments get over a certain amount, then you're able to change the investment plan based upon state statute.
I don't think, I wouldn't expect them to invest no money in Amazon, because to me, that may be that's a technical and that's too risky. But I would think lower risk form, that getting some type of, but I see what you're saying. It's only getting money on the growth of the stock itself. It's not getting no income from no dividend for some of the shares they have. Okay.
No, you're strictly you're strictly making money based on the average rate of that portfolio that's an investment altogether. So you're investing in that one mutual fund, and we really don't know, you probably won't know what, you would know the types of stocks that they were buying and stuff with that mutual fund, but you wouldn't know exactly what that is.
But what if the mutual fund, I'm sure they're paying some type of capital gain at the end of the year, would they be?
Not in these retirement funds.
Not in
You're not gonna pay a capital gains on a retirement fund.
Oh.
The tax side of that retirement fund is passed on to you when you begin to draw it, or that you withdraw from it, or all of these earnings are pretty much tax-free to that entity, and you want to earn that interest on there to build your fund.
Well, I'm referring to the mutual fund that they in. Some mutual fund at the end of the year pay capital gain, then based on the capital gain that they pay out, they reduce their funds to the amount. Just say they have a fund that was paying, that's worth $50, then they pay a $10 capital gain at the end, then it'll start at the next year $40. They not using none of that concept.
I don't think so,
Okay.
no.
All right.
No, not that I'm aware of. I mean, I wouldn't be opposed to moving to Bank of the Ozarks for all of it. You're saving a little bit of money. Their portfolio right now is earning a little bit more money than what it is, and you would take every advantage that you could possibly take care of right now. Rates are going to be very volatile for the next at least year to 18 months, so they're going to go up. I mean, everybody in this town is raising CD rates. We all raised Monday. You're going to have probably 3 rate increases by the Federal Reserve between now and the end of the year by at least quarter increments. So you're going to have 75 basis points. So from January to the end of the year, they're anticipating at least a 1% return. So what's that going to do? That's going to raise everything. You know, that's going to raise rates on just normal savings account, but it's also you're going to yield higher investments on these mutual fund returns as well. So I would probably say that if we wanted to, we could just get them to come do a presentation on what types of investments that they would recommend, and see if that would be any difference from what we're currently in with Stevens, and give us a better breakdown on how they're doing. But I don't feel very comfortable with Regions. Doesn't have anything to do with the company, but it's just the way they conduct their business, meaning that they were open-ended in the front, didn't want to give us a fee structure, and now they didn't even give us a review of their performance, which would be critical, in my opinion, as to whether you're going to go with them or not. We need to know what their track record is.
Right.
Their fee would be comparable, but
And believe it or not, I concur with what you just said, and mine would be based on, at least they did, Bank of the Ozark put a benchmark with the S&P 500 as to what they was getting, and just paid tier. So at least you did have something to go by as to
yeah.
what they were doing, and I wasn't gonna leave it. I don't think I was gonna want to leave it with Stevenson. Basically, you had, in my opinion, like what you were saying, Mayor, it between leave where's it at to go to Bank of Ozark.
Okay.
Because I think I asked, I think I sent an email to Rachel.
Yes, sir.
I sent her an email and tell her, checking it with, since they said they didn't ask for, what was the fee structure, but they didn't put it in here in the beginning either. So I did ask was,
Yeah, I did too, and we got the fee structure, but we don't have anything in here showing what their performance was,
right,
so.
I think I asked the same question by email. I asked about the fee structures and how much we were currently paying.
To me, that just shows lack of interest. If you're not really interested in something, you kind of
Right.
halfway do things. If you're really interested in trying to get your business, you would submit the documentation so that people can make a decision, so.
Tyrone, I do have a question on the, because you're dealing with them on a however daily or weekly business. How is Stevens compared to Bank of the Ozarks with getting back to you on answering questions or
Both of them.
How receptive are they to input?
Both of them are responsive, but I'll be honest with you, Minnie and Jeff are more personable. You're able to hold a conversation with them and everything not go here. And so that's been a big thing with us with the old police pension plan, is being able to thoroughly understand, if you don't have the financial background in investments, of exactly what's going on and how it directly affects the pension plan, not overall, not globally, what's going on in the investment world, but how are the investments affecting our plan directly? And that's been a really big thing with Bank OZK.
So with the combined, when Stevens combines our fund with everybody else, you don't really get a full picture, or?
Well, when they do it, you don't get the personalized investments from our funds alone. You just get the effect of the big investment.
How fund is doing.
Right. So our funds aren't just kind of handpicked, they're grouped in with several others. And so that doesn't affect your performance in your investment, as well as your ability to cherry pick and kind of figure out how you want your funds to be invested.
And you were talking about state statute. Statutorily, how are we allowed to invest that money? I mean, is there a percentage that has to be in a?
Yes, there are percentages, and we can get that for you. And Bank OZK and Stevens are both very familiar with those state statutes. There are also certain items that you can't invest in. I want to say like alcohol, gambling, those types of items you can't put these pension funds investments into. But there are other things that you can. There's also certain amounts. I believe the threshold, help me, Rachel, I think it's 5 million. There's a $5 million threshold on the investments where you can invest them.
Is that where Minnie was talking about switching over?
Yes.
I think it's either 3 or 5. Yeah,
And that changes your risk assessment.
Correct.
Once you have, they go into riskier investments when you have more money compared to when you have a lesser amount.
Would that be limited to momentum or investment? Meaning, well, I guess it's a fact that you buy the rumor and sell the facts. I'm quite sure they're not going to engage in none of that. But what I'm saying that I looked up what Arkansas stocks are they investing in? You know, you got.
That would be, I can get that information directly from Minnie, and that'll be a question that she's able to answer for you on exactly what local stocks they're investing in.
Most of the mutual funds that I'm familiar with, and even with the retirement plan that I have, is if we were to, this is the way I'm assuming that it would work, if you were to move to Bank of the Ozarks to manage just this fund and our fund only, they're going to present us with a list of funds on the breakdown based on what the state ordinance says that we're allowed to invest in. So in other words, they're not going to let you, the statute's set up to where you can't risk all of it in the stock market, because if you lost it overnight, we wouldn't have any retirement, and then the city would have a humongous financial burden because we're obligated to pay them people. So they'll have a breakdown, but they'll show you in those particular funds what stocks they are investing in.
Right.
And what types of stocks they're investing in. And then you would pick, so my employees have basically 4 or 5 funds that they can go out there and invest their money in. They can move it on a weekly basis, a daily basis, and they're managing their own money.
Right.
They can put it all in a preferred passbook savings account if they wanted to, and earn 5 basis points and keep it all safe. But they have a breakdown on that. We would get that same, we're not getting that ability to do now because you're lumped in with a group of people, and you're paying Stevens 44 basis points to make that decision for you based on their reputation.
Oh, okay.
So here, when Bank of the Ozark comes and presents us, that's one thing that we can ask them is what types of funds, how did those funds perform? And then my recommendation would be is that we kind of mix it, that you put some in the high rate of return, some in kind of the medium, and then some in kind of the low, and then keep what we have to keep in our, by state statute in the safe account, and then move on. But you'll have some control under that. But I don't think that you'll have a control over, well, I just want to buy all Walmart
Yeah,
stock.
yeah,
You
I
won't
don't-
have that. They'll show you what types of stocks they buy in those particular funds.
Like, I think you have like so much in T-bill, but I'm also, just say, if, like, say the city was issuing a bond issue, are they buying like that bond issues?
Usually, if you're investing in bonds, it's treasury bonds.
Right, okay. if
It's treasury bonds. They don't normally invest in individual, bond issues by
Okay.
municipalities or something like that. It's
Okay.
usually treasury bonds. I would say that we just have them come and that they bring us a, kind of a breakdown of how their performance has done and what kind of mutual funds they offer. When would we have to make a decision? Are we under contract or any type of obligation to stay where we're at for a while, or can we move at any time, or?
We haven't signed a contract with them in a very long time, but we'll review that and get George to review it. I know with the old police pension plan, it was fairly quick. 1 month they were with Stevens, and then they moved right over to Bank OZK, and it wasn't a big issue at all.
Who's authorized to sign those documents when we move and stuff on the TAPERS?
We will pull that. I believe it's, we'll pull it and see.
That's where I'm at. I would just rather, my recommendation would be to look at Bank of the Ozark and have them come in and just do a presentation on moving the whole fund with them. And maybe they could even do us a projection on, say, if we were to move with them, say in 3 years, what our annual return would be, based on their projections and what kind of income, that we would be producing and increasing. I think it would be good for the committee as well to look at how well the fund is done in dollars. That makes more sense to anybody. Meaning that if you start January 1 with 2.1 million and you end based on all of our withdrawals and all of our investment returns and activity we're doing, what we end with. And that would give you some idea, because they're actually doing that now because they're actually projecting the wealth of that fund as to when it's going to run out, right? So they're giving you a projection of when doomsday is coming, so they can give you that, and that would give you some idea of how well it's doing.
Okay, so is it just Bank OZK you want to see a presentation from?
That's all I'm interested in.
Okay.
I'm just one vote, so that's.
Okay.
I think that's going to be the best bet fee-wise and money-wise, and they're performing a little bit better they may perform a little bit better by themselves than what you're getting right now with them just being your custodian.
Is there any other questions, comments, concerns about this?
And so we probably have Minnie, the person that's doing OZK, would they be the presenter to us?
We'll
Okay.
contact OZK to see when they can come to do a presentation regarding the investment plan, the projection and income generated, and then their entire proposal.
Okay.
And maybe just show what it's done over the last 2 or 3 years,
Okay.
where it's been, because they've got those records, being the custodian, they have all those records.
Okay, so it's the desire of the committee to see a proposal at the next meeting. Do I have a motion?
Motion.
Second.
All in favor?
Aye.
All opposed? All right, the next order of business is other business. Is there any other business you want to discuss at this time?
Oh, you and I had corresponded about the employee that did not take her retirement or any sort of payment from TAPERS
Correct.
and then subsequently passed away.
Correct.
has anything
Yes.
changed with that?
Well, no, I did reach out to, the law firm that put it together, and they advised me that it would go to next of kin, seeing as we don't have any beneficiary information. She does have 3 children, and I did a valuation for that. So I'm still in contact with the children to get everything squared away for them to fill out the paperwork.
She didn't have a beneficiary?
What, can I specifically say her name, or is that, is it
I
going to be
would-
confidential?
I wouldn't, I would just,
Okay. It was my understanding that because of the computer problems in 2020, that all of the beneficiary information for everyone was lost.
Good grief.
So,
And I did reach out to, like I said, the law firm and to GRS to see if they had any information regarding a beneficiary, and there is nothing that they have.
So were we in the process of asking all these other people in TAPERS to update their beneficiary information?
Yes.
So that we,
Yes, sir, we'll start that, we'll do that. Okay, and is there any other business you'd like to address? Okay, next item is to adjourn. Do I have a motion?
so move.
All in favor?
Aye.
All opposed? Okay, the meeting is adjourned.